On Bill Baruch, Blue Line Futures and Blue Line Capital. Before we get into the markets, because you and I've got a lot to talk about, you sent me a lot of information. So just tell everybody what you're doing with Blue Line Futures and Blue Line Capital.
So Blue Line Futures, we're a futures and commodities brokerage firm. We work with clients from novice all the way. We got professional traders, people that are on or were on the CME floor working with us. We put out institutional type content daily, covering markets from the S&P to corn and cattle. In soft markets, we provided a trade desk that's here for clients. Again, talk to us as much or as little as they want. We got people that are calling in right now that don't have any exposure to gold and silver, and we're kind of holding their hand what to do in a market like this. So we also have technology, put all that in your hands. Now on the Blue Line Capital side, we're a registered investment advisor. We work with clients to help put their portfolio together, look at the retirement portfolio, understand what their goals are, what they need over the long run. Very boring stuff, but it's very needed and for people out there.
Is there an active investing component to Blue Line Capital? That's something I've been interested in lately, because I think especially with some of the things a lot of us think are going to go on in the next couple of years, unprecedented central bank globally, intervention, treasury, corporate bond buying by the Fed. Do you have an active component to your wealth management?
Well, what we do is we break down have a diversified portfolio. You know how it works. You got a certain amount put towards stocks and bonds, and then what we do is we have the Blue Line opportunistic bucket as well, where we may go long and short on different ideas. So that's what we're working on. And some of the things that we've liked this year are across the board. Big emphasis on software, but at the same time, you got to be careful in the environment out there. Again, I mentioned the word boring. This is slow, boring stuff. We're not taking large risks out there. Very calculated, and that's what you need to be in that type of portfolio. You hear people talking about it. Buy this stock and put your money into here. And yeah, it's nice to have your account where you're taking risks and speculating in different types of stocks, catching big moves, maybe doubling your account on a rise in the equity market like this. That's not really what you want to look at in your retirement portfolio. One thing to think about: if somebody gave you a loaded gun and it said you wanted 1,000 chance of shooting yourself, would you do that with your stock portfolio? And that's really what one way you got to look at it there too.
All right, we got a lot to talk about. So let's get into, I've already talked about the headlines, both with Scott and with Amelia. You know what they are. What do you think of the S&P Mini?
Well, right now, we did have a wave of weakness last week. I write research each morning. I mentioned the S&P was one of them. I personally author that. It's the Morning Express, Blue Line Futures, put it out each day. And in our research, we have a bias. And it goes everywhere from bearish all the way to bullish, but with neutral in between. We are typically cautiously bullish in the S&P. The market's been rising, but cautious because we don't know what factors are going to come out each day. You have to manage your risk when you're trading leverage. I did go cautiously bearish last week on that wave up to about 32.70, 32.80, just expecting some frothiness. We've seen some volatility with earnings. Got big tech this week. Some of them started last week, and that does bring that volatility. We also U.S. China back in the mix, so we did go cautiously bearish. We're continuing to hold that cautiously bearish bias right now. Now the S&P did, just because of a new day and a steep trend line, did move below a trend line from the March lows. So you could draw that all the way up from March. I think it was the June low, if I remember correctly, that it hits against. Today's open will be below that trend line. So it really matters what we do there today. We have major 3-star resistance, 32.26, 32.29. Staying below there, the bears are in the near-term driver's seat.
So give those levels again and kind of what you would do toward those levels. I don't want to dismiss that.
Yes. Yeah. So if you followed us, taking a cautiously bearish outlook last week, you wrote it down. Ultimately, you want to potentially still either you took your profits going into the end of the weekend, which we always encourage. Sometimes on these markets, especially in the S&P, you don't know how things are opening up. But on a Sunday night, but 32.26, 32.29. It gives you a reason to stay short. If you want your stop above there, we start moving through there, this thing could run back up a bit. So we will hold that cautiously bearish bias below 32.26, 32.29. And when we put that out, our downside target was 31.69, 31.83, which we didn't quite get there. And we have strong support in front of that, 31.90, 31.94, two close levels, but there's just a lot of support down in that area. And we may get there, but again, you don't want to squeeze the last bit of drops from the orange.
All right. So you also wanted to talk about, I believe it was copper, and I'm going to ask Jesus to put up Bill chart 2, which is the copper chart. Can you kind of discuss what you were seeing with copper? Because I think that's a super interesting thing from my perspective, at least.
Had a very strong run, and I think what we've seen is that Asia and the Far East were really some of the first to come out of the pandemic. You start to see demand renewed. Obviously, too, there is a supply worries with mines in Chile that have driven this price up. But we've seen China actually show growth in their recent GDP numbers, and overall around the world, the demand's coming back. Stimulus has been out there. This is why copper has risen all the way to $3. I mean, it was down below 2, all the way up to $3. There's some historical resistance levels at $3. However you want to look at it, different price levels, different market profiles, as well as some trend lines you can look at $3. I think this move is a little overdone. It's sort of in line with their cautiously bearish bias last week in the S&P. As well, you got renewed China-U.S. tensions. I think that's not talked about enough right now. I think there's, not to go on a tangent, but I think there is an outlook that the U.S. or in the U.S. that President Trump is not going to push on China too much ahead of the election. But I do think, again, copper's overdone here. One of the ways we were looking at that last week, and I talked about it in one of my videos out to clients, is we're positioning short in copper using a put butterfly with a kicker. One of the things we were going past the September option expiration in that, just to give a little more time, a little less liquidity in October, but we were doing a put butterfly, a 285, 275, 265 put butterfly, which is traditional butterfly. You're 1 by 2 by 1, and you're selling 2 of the 275s in the middle. We actually bought an extra 265 at the bottom. It's about 3.5 to 4 cents, maybe a little more than 4 cents right now, which costs you about $1,000 to get in. Holding time frame on that is about 2 to 3 weeks from now.
I love that one. Let's take a look at Bill chart 3, which is going to be silver. Okay. Are you looking at the Robinhood owners of silver index like a lot of other people are?
I haven't watched it so much because I do have some of my roadmap already laid out for this move. This is something we've been extremely bullish at Blue Line Futures and silver and gold and Blue Line Capital for that matter. We have gold in all of our portfolios, but really looking for this move to happen. U.S. dollar weakness really fueling it. And looking at historically what silver's done in the past, we've seen silver all the way at $50. I think there is legs in this. But we're getting people calling us almost every day now saying, I want to buy silver, I want to buy gold. And if you haven't been in it, you really want to take a more cautious outlook here in the sense that this is really the front page news. Everybody's buying it. You mentioned the Robinhood holders. So it's good to have silver gold exposure, but I always say you never want to chase gold and silver when everybody's screaming for it. That's when you want to capitalize on gold and silver that you already own. So I want to say, where's resistance in silver? $26, 26.5 is a big area of resistance. You look historically, that's the 382 retracement from the low. We actually made a new low in March in silver on this leg down from $50. And that 382 retracement is 26.5. Previous lows before breaking down or the way down from that $50 move was about 26.5. Good resistance up there at 26.5. What I want to see is a pullback. I want to see some construction. I want silver to show me that it can hold ground. Now, in 2016, when Brexit fears were out there, silver spiked up to about 21.5, $21. So you look at that area, I want to see it hold out above there. We have some other technical indicators aligning there. So if silver can pull back, hold about $21, I think that'd be really constructive and potentially the next wave, either if it gets 26 here or not, but hits 26 on that next wave, maybe up to $30.
Gold silver ratio, Billy. Typically, I shouldn't say typically, historically, going back to forever, the median of that was about 65, 55, somewhere in that range. So when you're talking about the gold silver ratio, went all the way up to 114, back down to 95. Is it a factor anymore? Do you care?
It's definitely a factor because even at times that I thought gold was going to be outpacing silver after that spike in that high, the ratio in March, that ratio really never came back up. It showed you silver was doing some construction. So it's not really a ratio that I want to trade, but it was a ratio that showed me that silver was lurking higher, even though it was underperforming, it was lurking higher, and this move was something that was in development. So I think it was important to watch that because it's ultimately set the stage for this surge in silver.
All right, IGV is the next chart. That's going to be Bill chart 4. What do you
breaking down there. And you got names like Adobe, you got CRM, which is Salesforce. Microsoft is in there. You got Intuitive, QuickBooks, which is Intuit, sorry, in there. You got a lot of software names in there that I think are really the backbone of stability within that sector. So if this thing can continue to hold and stay within that channel, I'm very hopeful for the market, even though it's cautiously bearish in the very near term from an investment standpoint. Very hopeful for the market to continue this overall move higher.
So do you want to buy the actual ETF? Are you looking at options on it? What are you looking at specifically?
I like just buying the actual ETF and having that in your portfolio. I think it's great, give you to diversified across the software. You don't have to worry about the idiosyncratic risk and being heavier on one name and missing some of the others. It's a very good diversified name to have in there.
Billy, where can people find you if they want to find you?
Well, bluelinefutures.com is the best way to find us. We put out research up there each day. We put our videos. I got partners putting up videos as well, talking about markets. So we cover everything, like I said, the S&P and gold to corn and cattle. So you'll find out a lot of content on there, actionable stuff. Bluelinefutures.com. We have platforms to check out. And again, you can sign up for a 14-day trial of our research. Check it out, and then someone at our trade desk will speak with you and see what you're doing in the markets. And you always bounce off ideas from us here too.
Billy, thanks again for joining us, man. I really appreciate you coming on, taking time out of your morning. I know you're a busy guy running those two companies. Bill Baruch, Blue Line Futures, Blue Line Capital. We're going to be right back again after this quick break. It's a less than a minute and a half break. So stick with us because we got Jimmy Iuorio, and we're going to check if he has pants on. See you guys in a bit.